Although the Dow traded lower today, it still used the T-line as a support, still making this trajectory, indicating there is no major change of investor sentiment. The NASDAQ traded higher, but we're in the overbought condition. We had a gap up through the resistance level. It backed off but closed near the high end of the range. Want to be a little bit careful. This is kind of a hanging man signal in the overbought area. If it opens lower and starts trading lower, you might expect some profit taking, maybe all the way back to the T-line, which in this case by tomorrow may be back up to the top of this level. So depending on how the markets open tomorrow, it's going to be very important as far as whether they're continuing the uptrend or whether there's going to be some backing and filling. Not necessarily saying there's a big reversal in the market, but probably looking for some profit taking. The accumulative knowledge of each pattern is based upon what each individual signal or pattern or signal pattern is developing. As we can see, there was a fry pan bottom setting up. But what was even more compelling was we had a belt hold signal right here, which basically told us they wiped out a lot of the sellers. Then we had bullish confirmation staying above the T-line. We were buying today based upon a positive open because that would have told us that this resistance level coming out of a fry pan bottom that had sucked up a lot of the sellers didn't have sellers in the way that we'd be breaking out into new territory. This is all just common sense analysis based upon what each individual signal tells us and how that is incorporated into analyzing a pattern, making the analysis of a pattern breakout situation that much more clear, knowing what's happened just prior to that breakout. And we can utilize that same information when taking profits. Look at the big fry pan bottom on Hertz. We were buying aggressively as we saw the bobble pattern where it came up, failed at the 50, pulled back to the T-line, couldn't close below the T-line, kind of bobbled in here, and when it broke out, it told us we were in our next wave. First sell signal we've seen in this uptrend is today with a bearish harami telling us the buying has stopped. This makes it very simple. If it opens lower tomorrow, the probabilities are there's more profit taking, probably back to the T-line. That's where you start coming out of your trades. Candlestick analysis is merely the graphic depiction of what happens in human nature, which has occurred for the last 400 years. That's why the Japanese rice traders have identified the patterns and the signals for us. And they tell us also what confirms those signals or patterns. Once again, if after a bullish harami in the overbought condition, if it opens lower, take your profits. You can always buy back on the next pattern, which in this case would probably be a J-hook pattern. That'll be it. We'll see you in the chat rooms.